December 2024. While you were focused on holiday shopping and year-end planning, something unprecedented happened in the shadows of global finance. China quietly reduced their U.S. Treasury holdings by over $50 billion, continuing an 11-year pattern that signals the beginning of the end for dollar dominance. But this isn't just about China. This is about a coordinated, systematic dismantling of the financial system that has kept America on top for 80 years. And if you're holding dollars right now, you need to understand what happens next. The hidden exodus. What I'm about to tell you isn't conspiracy theory. It's happening in real time, documented in Federal Reserve custody data and Treasury International Capital reports that most Americans never see. China's Treasury holdings have dropped from over $1.3 trillion at their peak to just $757 billion by late 2025. That's a reduction of over $500 billion. And it's accelerating at an unprecedented pace that should terrify every American holding dollars. But here's what makes this truly dangerous. China isn't alone. They're leading a coordinated effort involving the world's largest economies. The BRICS nations, Brazil, Russia, India, China, and South Africa, now represent over 40% of global population and a growing share of world GDP. And they're all moving away from the dollar simultaneously in what can only be described as financial warfare against American hegemony. The numbers don't lie. According to the latest Treasury International Capital data, foreign holdings of U.S. securities have been declining steadily. Japan, traditionally our largest creditor after China, has also been reducing their treasury positions. Belgium, which often acts as a proxy for other nations, has cut their holdings by over $30 billion in the past year alone. This isn't random market activity. This is coordinated strategic positioning. The petrodollar's death spiral. For 50 years, the US dollar has been the world's reserve currency, thanks to the petrodollar system established in 1971. When Nixon took America off the gold standard, he made a deal with Saudi Arabia. They would sell oil exclusively in dollars, and America would provide military protection. This forced every country to hold massive dollar reserves just to buy energy, creating artificial demand for our currency. But that system is cracking under the weight of American overreach. In 2023, Saudi Arabia announced they're open to selling oil and other currencies. That's not just a policy change. It's the foundational pillar of American financial dominance crumbling in real time. The Saudis, who made the petrodollar possible, are now considering abandoning it entirely. Think about what this means. Every barrel of oil sold outside the dollar system is a barrel that doesn't require dollar reserves. Every energy transaction in yuan or rubles is a transaction that bypasses American financial control. The Saudis have been in talks with China about accepting yuan for oil sales. Russia is already selling energy to India in rupees. Iran trades oil with China in yuan through barter systems that completely avoid the dollar. The petrodollar system created a captive market for U.S. debt. Countries needed dollars, so they bought treasury bonds. But when oil can be purchased in other currencies, that captive market disappears. And without that artificial demand, the true value of the dollar, backed by nothing but debt and promises, becomes apparent. The BRICS alternative. While America has been printing trillions and weaponizing the dollar through sanctions, BRICS has been quietly building an alternative system that's now operational and expanding rapidly. They've developed BRICS Pay, a blockchain-based payment platform that can handle 20,000 transactions per second without touching the dollar system. They're creating bilateral currency agreements, allowing countries to trade directly in their own currencies without dollar intermediation. Russia now conducts 90% of its trade in non-dollar currencies. China and India are settling transactions in yuan and rupees through a sophisticated swap mechanism. Brazil is trading with China using their local currencies, eliminating dollar transaction costs and reducing exposure to U.S. monetary policy. The infrastructure for a post-dollar world already exists and is being tested daily with increasing transaction volumes. Over 40 countries have expressed interest in joining BRICS or participating in their new financial system. These aren't small nations. We're talking about Indonesia, Mexico, Argentina, Nigeria, Egypt, Turkey, and others. Billions of people, trillions in GDP, all looking for alternatives to dollar dependence. The expansion of BRICS from 5 to potentially 50-plus nations represents the largest geopolitical realignment since World War II. The BRICS nations are also developing their own credit rating agencies, challenging the Western monopoly of Moody's, S&P, and Fitch. They're creating development banks that compete with the World Bank and IMF. They're building trade finance mechanisms that bypass Western financial institutions entirely. This isn't just about currency, it's about creating a parallel financial universe. The gold factor. Here's what should terrify every dollar holder. While America has been accumulating debt, China has been accumulating gold at a pace that defies official reporting. Official numbers claim China holds around 2,000 tons, but independent analysts estimate the real number could be 20,000 to 30,000 tons, more than the United States officially holds, and possibly more than any nation in history. Why does this matter? Because there are persistent rumors of a unit currency being developed by BRICS, 40% backed by gold, 60% by BRICS currencies. Imagine China announcing that the yuan is now partially convertible to gold at a fixed rate. Suddenly, every central bank holding worthless paper dollars will start questioning their strategy and demanding real assets instead of promises. Gold has been money for 5,000 years. It can't be printed. It can't be devalued by government decree. It has intrinsic value recognized across all cultures and throughout all of human history. And if China backs their currency with gold, even partially, it becomes a credible alternative to the dollar. A currency backed by something real versus a currency backed by nothing but debt and promises. China's gold accumulation strategy has been methodical and secretive. They have been buying through multiple channels, direct purchases, mining production that never leaves the country, and acquisition through state-owned enterprises. They've encouraged their citizens to buy gold, making it easily available through banks and vending machines. They've been preparing for this moment for over a decade. The Shanghai Gold Exchange now handles more physical gold volume than London or New York. China is building the infrastructure to become the center of the global gold market. When you control the gold market, you control the benchmark for what money is worth. This isn't accidental, it's strategic preparation for monetary warfare. The historical pattern. This isn't the first time a reserve currency has collapsed, and history shows us exactly how this process unfolds. The British pound dominated global trade for over a century before losing its status to the dollar. The transition happened faster than anyone expected. Within just a few decades, the pound went from dominant to irrelevant in international trade. We're seeing the exact same pattern now, but compressed into a much shorter time frame due to modern communication and financial technology. According to the IMF, the dollar's share of global foreign exchange reserves has fallen from 71% in 1999 to under 59% today. That's a massive decline, and it's accelerating. China's yuan now accounts for over 2.5% of global reserves, up from basically zero a decade ago. The trajectory is clear, the momentum is building, and once it reaches critical mass, the collapse will be swift and brutal. Historical precedent shows that reserve currency transitions happen gradually, then suddenly. We're in the gradual phase now, but the sudden phase is approaching rapidly. Before the pound collapsed, there were warning signs that most people ignored. Trade settlements in other currencies increased. Alternative financial centers emerged. Gold flowed from the declining power to the rising power. Sound familiar? The same patterns that preceded the pound's collapse are happening to the dollar right now. The weaponization backfire. America's decision to weaponize the dollar through sanctions has accelerated this process beyond what anyone anticipated. When we froze Russia's central bank reserves, when we cut them off from SWIFT, when we seized assets of foreign nationals, we proved to every country watching that the dollar isn't neutral money. It's a tool of American foreign policy that can be turned against anyone at any time. Countries started asking themselves, if America can do this to Russia, what stops them from doing it to us? The answer is nothing. And that realization has driven the search for alternatives into overdrive. We thought sanctions would hurt Russia. Instead, they've hurt the dollar's credibility as a neutral store of value and medium of exchange. We've essentially forced other countries to build alternatives to our system. Russia developed alternative payment systems. China, Accelerated yuan internationalization. India started trading in rupees. The entire global south began questioning why they should be subject to American financial control when they have no say in American policy. The sanctions regime has also revealed the extent of American financial surveillance. Every dollar transaction can be monitored, tracked, and potentially blocked by U.S. authorities. This level of control was tolerable when America was seen as a benevolent hegemon, but as trust erodes, so does acceptance of this surveillance state. The cascade effect. When the tipping point comes, and current trends suggest it's 2 to 5 years away, the collapse will be swift and brutal beyond anything most Americans can imagine. Every central bank in the world holds trillions in U.S. Treasury bonds. When they realize China is serious about replacing the dollar, when they see the BRICS alternative gaining traction, they'll panic. They'll start dumping their dollar holdings too. This creates a cascade effect that becomes unstoppable. As more countries sell dollars, the currency weakens. As it weakens, more countries want to exit before they're left holding worthless paper. It becomes a self-reinforcing cycle that feeds on itself until the entire system collapses. Think about it logically. If you're a central banker and you see China, Russia, India, and Brazil all moving away from dollars, do you want to be the last one holding the bag? Of course not. You start selling too. And when you start selling, other central bankers see you're selling and start questioning their own positions. The mathematics of this cascade are terrifying. There are approximately $12 trillion in dollar reserves held by foreign central banks. If even 20% of that comes to market simultaneously, it would overwhelm any possible buyers. The Federal Reserve would be forced to choose between hyperinflation, printing money to buy the bonds, or allowing interest rates to spike to levels that would destroy the economy. What this means for you. When the dollar loses reserve currency status, 4 catastrophic things happen immediately to every American. First, interest rates skyrocket beyond anything seen in modern history. Your mortgage goes from 7% to 15% or higher. Car loans double or triple. Credit cards hit 35 to 40%. The entire economy seizes up because borrowing becomes prohibitively expensive. The housing market collapses because nobody can afford the payments. Businesses can't get loans to operate. The credit-based economy simply stops functioning. Second, hyperinflation destroys your purchasing power. All those dollars held overseas come flooding back to America in what economists call reverse currency flow. When you suddenly have trillions of extra dollars chasing the same amount of goods and services, prices don't just rise, they explode. We're talking Weimar Germany levels, where your groceries could double in price every few months. Your life savings lose half their value in a year, then half again the next year. Third, America's standard of living plummets to levels not seen since the Great Depression. We can no longer import more than we export. We can no longer live beyond our means. No more cheap electronics from China. No more affordable goods from overseas. No more abundant food imports. Everything costs dramatically more while wages stagnate in real terms. We have to actually produce things of value to trade for the things we want. Fourth, fiscal crisis unlike anything in American history. With $35 trillion in national debt and rising, the government faces impossible choices when foreigners stop buying our bonds. Massive cuts to Social Security, Medicare, defense spending, everything, or default on the debt. Either option leads to social and economic chaos, civil unrest, and political instability. The social implications are staggering. When people can't afford food, housing, or basic necessities, societies break down. We've seen this pattern in every hyperinflationary collapse throughout history. Venezuela, Zimbabwe, Weimar Germany. The script is always the same. The timeline. Based on current acceleration patterns and historical precedent, here's what to expect. 2025. Continued quiet de-dollarization accelerates. More bilateral agreements bypass the dollar. BRICS payment systems go fully operational with major transaction volumes. Mainstream media still isn't covering this seriously, but alternative financial media begins sounding alarms. The exodus continues in the shadows while most Americans remain oblivious. 2026, the tipping point arrives. China makes a major move, either yuan gold convertibility announcement or launching the BRICS currency with significant backing. Multiple countries simultaneously announce reduced dollar usage. The public starts waking up to what's happening. Dollar begins noticeable decline against other currencies and gold. Financial markets become volatile as reality sets in. 2027, crisis mode begins. Rapid dollar devaluation accelerates. Inflation spikes beyond government ability to control through interest rate manipulation. Interest rates forced higher, triggering recession. Political chaos as government tries to respond with increasingly desperate measures. This is when most Americans realize their savings are in mortal danger. 2028 to 2030. New normal established. Dollar is no longer dominant reserve currency, but becomes one of several regional currencies. America's standard of living has declined permanently. New global financial order with China at the center becomes operational. The transition is complete, and America adjusts to life as a normal country rather than a global hegemon. This timeline could accelerate dramatically if China makes an unexpected move, if a major crisis triggers panic selling, or if more countries join the exodus simultaneously. The process could also be delayed if America makes significant policy changes, but current political dysfunction makes meaningful reform unlikely. Protection, strategy. You cannot stop this historical process, but you can protect yourself and your family if you act now. Immediate actions this month. Calculate your dollar exposure. If it's over 50% of total wealth, you're dangerously concentrated. Buy physical gold and silver, at least 20 to 30% allocation, stored securely outside the banking system. Consider real estate with minimal debt. Land and property retain value during currency crises. Invest in productive assets, energy companies, agricultural businesses, mining operations. Open international accounts while you still can. This process takes months and will become harder. Advanced strategies for sophisticated investors. Diversify internationally. Switzerland, Singapore, Norway have more stable currencies and banking systems. Build skills independent of money. Food production, repair abilities, medical knowledge. Create alternative income streams in foreign currencies. Freelancing, international business. Consider 5 to 10% cryptocurrency allocation as digital hedge. Bitcoin specifically as digital gold. Reduce variable rate debt before interest rates spike. Refinance to fixed rates now. Emergency preparations for family security. Keep 3 to 6 months' expenses in physical cash for immediate needs during transition chaos. Build local community networks and relationships. Social capital becomes crucial during crises. Learn practical skills that have value regardless of currency. Farming, mechanics, healthcare. Consider your location carefully. Cities dependent on imports will suffer most during dollar collapse. Stockpile essential supplies, food, medicine, tools that will become expensive or unavailable. The uncomfortable truth. The people who understand what's happening, the wealthy, the connected, the financial elite, they've already moved their money. They've already bought hard assets. They've already diversified internationally. They're positioned to profit from this crisis, while regular people get destroyed by forces they don't understand. Warren Buffett's Berkshire Hathaway is sitting on over $300 billion in cash and short-term treasuries. Why? Because he's waiting for the crash to buy assets at fire sale prices. The smart money knows what's coming and is positioning accordingly. Ray Dalio has been warning about currency debasement for years. George Soros made billions betting against currencies. They understand the game. The $50+ billion China has pulled out of treasuries isn't the end, it's the beginning. It's the warning shot. It's the signal that the endgame has started, and while the financial elite prepare to profit, regular Americans are being kept in the dark about the greatest wealth transfer in human history. This isn't conspiracy theory, it's conspiracy fact. The evidence is hiding in plain sight in Federal Reserve reports, Treasury data, and central bank communications. But it requires financial literacy to understand. and our education system has deliberately kept Americans financially illiterate. Why you're not hearing about this? Some of you are wondering, if this is so serious, why isn't it bigger news? Why aren't politicians talking about it? Why isn't this the lead story on every news channel? The answer reveals the depth of the problem. Most journalists don't understand international finance. They don't track capital flows or read central bank reports. They don't understand the mechanics of reserve currencies or the implications of de-dollarization. They're focused on whatever generates clicks today: political drama, celebrity gossip, local crime stories. Financial literacy among media professionals is shockingly low. But there's also an element of deliberate control and suppression. The people who do understand what's happening, government officials, central bankers, financial executives, have every incentive to keep this quiet. If people panic about the dollar, it accelerates the collapse, so they downplay it. They reassure everyone that everything is fine. They attack anyone who raises alarms as conspiracy theorists or fearmongers. I've seen this playbook before. In 2007, people who warned about the housing bubble were dismissed as crazy. The experts on TV said housing prices never go down, that subprime mortgages were fine, that the economy was strong. Then 2008 happened, and millions lost everything while the experts claimed nobody could have seen it coming. The same dynamic is playing out now with the dollar. The official narrative is that the dollar is strong, that it will always be the reserve currency, that there's nothing to worry about. But the data tells a different story. The actions of China and other countries tell a different story. And history tells us that reserve currencies don't last forever. The global shift. This isn't just about economics. It's about the fundamental restructuring of global power that happens once every few centuries. For 80 years, America has been the global hegemon because we controlled the world's money. Countries had to play by our rules because they needed our currency to participate in international trade. But that's ending, and with it, American dominance in global affairs. China is offering an alternative system where countries don't have to worry about American sanctions or political pressure, where they can trade freely without Washington's approval, where their sovereignty is respected rather than subordinated to American interests. The Belt and Road Initiative, which seemed like infrastructure investment, was actually about building economic dependencies and alternative trade routes. Countries that owe China money, that rely on Chinese investment, that trade primarily with China, they're going to side with China when forced to choose between the American and Chinese systems. We're witnessing the decline of American financial hegemony in real time, and with it, the decline of American global influence. Just like the British pound lost its status to the dollar in the 20th century, the dollar is losing its status to the yuan in the 21st century. And just like Britain had to adjust to life as a normal country rather than a global empire, America will have to make the same adjustment. The implications extend far beyond finance. American military power depends on our ability to print money to fund it. American diplomatic influence depends on other countries needing our currency. American cultural dominance depends on our economic strength. When the dollar falls, everything else follows. Conclusion. The dollar's 80-year reign as the world's reserve currency is ending, and most Americans have no idea what's coming. The infrastructure for its replacement already exists and is being tested daily. The timeline is compressed due to modern technology and communication. The cascade effect, once it begins, will be unstoppable and devastating. China's $50+ billion Treasury reduction is just the beginning of a $1 trillion exodus that will reshape the global economy. The BRICS alternative system is operational. The gold backing is in place. The political will exists. The only question is timing. Most Americans have no idea this is happening. They're going to wake up one day and find their dollars worth half what they were. Their retirement accounts decimated, their savings gone, their standard of living permanently reduced, their country no longer the global superpower they grew up believing it would always be. But you're not most Americans. You're reading this analysis. You're getting the warning. You understand what the data means. You still have time to act, but that window is closing rapidly. The question isn't whether this will happen. The historical forces are too powerful to stop. The question is whether you'll be ready when it does, whether you'll be among the prepared few or the unprepared many. The $1 trillion exodus isn't coming, it's already here. China has fired the first shot in the greatest financial war in human history, and America is losing. The time for denial is over. The time for action is now.